Hey guys, we missed the market report yesterday. The eclipse kind of put everything for me behind. Basically, my Substack was behind because Substack started to shut down here and there. Kevin and I actually got on, but as we got on, we just kind of continued to be like, I was like looking at it and going like, we're not even going to be live. The connections were so bad. YouTube was overloaded with the eclipse stuff. I'm in Ohio, so I don't know if that was kind of putting a little bit more pressure on things, but here we are today. Eclipse is over. Commodity markets are still running. How are you doing today, Kevin?
Doing all right, man. I mean, so we have the equity market seeing a little bit of volatility today. We have CPI coming out tomorrow, so obviously we should see some volatility. But as you talked about, commodity markets for the most part are holding up fairly well. We are seeing a pullback when it comes to crude. Not too surprised by that right now. And metals continue to run. I mean, we had a pretty nice, decent run in metals earlier this morning. Saw a little bit of a pullback here, but for the most part, the majority of them are green on the session. So kind of a split day when you're looking at the commodity space as a whole. But once again, I think it's going to be the positioning going into CPI that's going to be key.
Yeah, I mean, just looking at it, the 1 day performance, and I think that what's awesome, and you made a funny joke, and I was like, I know that's why I get along with Kevin. I actually even showed my fiance this, which is you posted the GIF of it was from Charlie Murphy's stories with which one was that? Rick James? Yeah,
Yeah.
the F
Mm-hmm.
your couch one. Yeah. So that was a great GIF. Excited for you on that one. That was good timing. But I was looking at Palladium, and like today, Palladium's still following through a bit. We're up over 3% in Palladium. Orange juice is almost to 3%. Coffee, it's been another one. We've been long it for a while. It kind of just hung out and just chopped around for most of the time. Which happens a lot. You'll get, as a trend following commodities trader, you get tons of false signals. People always ask me, do I have a time stop? This is a good time to actually talk about that. No, I do not have a time stop. I've never used a time stop. I don't think it makes sense for my trading time frame because a lot of the times you get these signals, you get something hits a nice breakout and then just kind of chops around for a while. This will happen here and there. So as that's kind of happening, you just kind of have to be able to handle the volatility, understand that things, when they break out, sometimes they come right back in the zone and hang out for a little while. And if you trust your system and your strategy, you kind of stick with it. Now, once again, I'm not a day trader. I'm not a short-term trader. If I was a short-term trader, it might be different. But being in my time frame, waiting, a month for a move isn't the end of the world for me. So coffee making a nice move now. It's really nice. Copper, continues to just blast up there. That's another one that we've been talking about a lot. I think the cool thing that you got, and Kevin brought this up the other week, if you guys are really looking at this stuff and paying attention to what Kevin and I are doing, like really go back and check out, our work from the beginning of this year to now. We were talking about the oil trade, which we both had great trades in that as well. Great trade ideas. Ended up having an awesome move. We actually in our newsletter, we actually put out an alert to buy options on it, which are just about to expire and they're well into the money. So I mean, we've been pretty on point with this whole move in the commodities market lately. And just looking at, how all of these started to move with it, copper is also there now, all of these things. So, what are you seeing, Kevin? And, I've not to just sit here and pat ourselves on the backs for so long, but also saying that people should continue to, pay attention with what we're doing.
Yeah, definitely. I mean, sometimes you can find some really good nuggets that are out there. You don't have to have, follow the biggest the person that's on any type of social media. There's a lot of great gems, and not just talking about us, but others within the marketplace as well. Look, so crude wrote about this in the report here. So crude looked a little bit extended, kind of getting to that 87.50-ish level, right? And not to say that it was something that was negative, that we should expect this huge sell-off in crude. The data that we had from the EIA and the API last week, the American Petroleum Institute, it was good data, Jason, right? It wasn't anything that shocked me to say, oh man, there's another $3 or $4 implied move to the upside for crude either. It wasn't anything bad. It wasn't anything good. I think the refining rates are going to be the main focus. And right now we're sitting at around 87 and some change, 87% and some change. But we are seeing it increase incrementally on a week over week basis. Now the balance between how much do we extract and then how much are we refining is going to be the key area. And so if we do see refining rates going up, but we're also extracting a lot more crude oil, that means that we can put more supply into the marketplace that could depress prices. But if you're not really seeing the extraction portion really keeping up with through refining, and we continue to have these tight inventory levels, which I think is the strategy for a lot of these main producers, then I think supplies can continue to be tight. Now, the EIA came out with their short-term energy outlook today. They come out with that every month. I would suggest checking it out and reading it. But they've been behind, and they've been behind because of the China narrative. They did not think that China was going to expand the way that it was, and they are not seeing and did not forecast the fact that the EU manufacturing industry is starting to come back. We actually had Germany industrial production numbers overnight. They looked actually pretty good. Italy has the same type of scenario that's going on right now. And so that's going to be ultimately bullish when it comes to crude. I'm still a firm believer that between $80 to $85 is where we see price stability. I know that we're over that right now, but kind of like you talk about with your trend following mechanisms that are out there, your strategies that are out there, until something fundamentally changes, I'm not going to change my thesis either. And we can continue to move higher in price and crude. But until I have something that says, okay, here's a reason why for it, moving or adjusting your thesis on a price level for a particular product or an equity, I just don't feel like it does any type of justice. If we stay between 80 to 85, I think that's stable enough for energy companies to be profitable and continue to catch a bid. The energy sector, I believe, is the number two or three performing sector here. If you're looking at the S&P 500, which is phenomenal. But can it go to 90? Can it go to 95? Could it go to 100? Maybe. I have to see that on a geopolitical scale in order to make that commentary right now, and I don't see that. And even if we do see an escalation between Iran and Israel, which we are seeing, right, and there's a lot of chatter going back and forth, unless that's going to actually directly disrupt supply chains, or if Iran tries to enact some type of embargo to impact Western countries, I really don't see that event being enough of a catalyst to push us higher. What do you think?
No, that's a good point, and I think that's also important to think. No matter how you trade, you have to really kind of stick to your strategy and what you know. And sometimes there's going to be winners and losers. Like sometimes Kevin's going to call level and he's going to get it completely right, and sometimes I'm going to say, hey, the trend is up, and I'm going to keep riding the trend, and I'm going to get it right. That's just how trading works. That's what makes a market. But you got to figure out what type of strategy fits for you. If Kevin's more of a shorter term trader, I'm more of a longer term trader, there's two very different ways to look at things. He could be saying something like, hey, look, it's going to hit this 85 level, 90 level, even probably level out there, maybe sit between 80 and 85 for a while. And he might be looking for that for a month. And I could be looking out 2-3 years for my trade. So you really have to identify those things. Also energy is actually leading the way. The last month, energy has been the leader. It's up almost 10%, 9.3% at the moment, in a 3-month relative basis, which is kind of the best way to look at things, I think, if you're really looking at where the market regime is. In a 3-month basis, energy is up over 12%. And then communication services is still in first place. Technology is right behind it. So I think just looking at those little nuances inside of the market, understanding what's going on, I think it's really important to understand what Kevin just said, which is, hey, if oil stays here, fundamentally, that makes a lot of sense to invest in energy companies. It makes them profitable. It makes them continue to move higher, most likely. That's an important thing to understand. And then two is, most people are on here are looking for ways to trade the commodities markets by using stocks. And so the energy sector, and understanding that and then finding your uptrends within that, that's going to help you to really outperform the market and find some relative strength in certain areas. But I think what really drives me and what I continue to see is, hey, it's at the beginning of our trade. Think about it. When we talked about oil at the beginning of our conversations, basically, we talked about oil, the possibility of it moving higher, how it would move higher. And most of those things happen. And for me, most of the time, the price is trying to tell a story. And it's not that the price is always right. People say that, and I do. I'm a price action guy. But once again, I don't think the price is always right. I think the price can change a lot, but I think the price gives us hints because it's trying to figure out what the market is going to do in the future. So if we're looking at the market and going, okay, the energy prices continue to move up, the commodity prices continue to move up, energy, oil, heating oil, these things are starting to move higher. That's trying to tell me a story. So I think the geopolitical risk and the things that would fundamentally drive it higher are out there and do have a possibility of happening, most likely because of the way the price is. So that's the way I kind of look at it. But I'm just kind of looking at it that way, kind of narrowing my scope at the moment and going like, hey, trends look good. Everything looks good right now. Let's see where we end up.
Yeah, and just to clarify too, because I should have said that, right? So I'll usually, if I don't specify a time frame on something, that I'm usually talking the week of or the next 2 weeks, I'll come out and say, hey, over the next couple of, I mean, you've been on Spaces with me. Sometimes I'll say, hey, this seems like it's basing out. This could happen in this particular time frame. But if I don't say that, I look at markets on a week by week basis. What are we looking at? How is it structured? Because things can change and dynamics can change. And right now, once again, we are seeing a little bit of a pullback. And I think that's healthy. We had this really nice channel to the upside since December. We're hitting the upper end of that channel. And we haven't violated it yet. Now, if we violate it to the upside and break out, then yeah, we could see prices continuing to go higher. But people have to always understand this. Violent moves in commodity markets generally, there's exceptions, cocoa being one of them, right? Violent price action in markets generally is also not a good thing for companies. They want stability. Price stability provides margins. If we see oil move up to $100 next week, and then the following week it drops down to $80, that volatility actually can still, no matter if it went to 100 and came back to 80, you can still see gas prices moved higher because the implied vol, the uncertainty in price moves prices higher for businesses, just like we do for options, or if you look at it from a commodity standpoint. So I think the stability in price is kind of where I'm focusing on here right now. I also wrote in the note, and this is probably one that, look, there's an opportunity that's out there. How much is my conviction? I'm saying, like, and I'm not making any recommendations, but there is a catch-up trade in heating oil and diesel. We talk about heating oil and diesel. It's pretty much the same thing for all intents and purposes, right? So there's a catch-up trade where heating oil has still not even captured its 100-week moving average, where gasoline and oil has. And so if we do see this spike, we are seeing a spike and an increase in gasoline demand. The refining mix at the 90% operating level right now would then cause for refiners to then focus more on gasoline and less on diesel, which could then shorten supply. And diesel and distillates in general are actually still in fairly tight markets, to say the least. So that's kind of an area that I'm looking at as far as the next couple of weeks. Is there going to be an opportunity where individuals and speculators look at the diesel trade as that catch up, just like we are seeing with palladium and platinum? For those that did not see the copper trade a month ago or 2 months ago and feel like they're left out, now, there's a separate trade that's going into gold. You're seeing the same type of flows and even more of a dynamic flow into silver. We're still outperforming gold since we talked about that last week. How long can that last? That's to be here nor there. I wrote about it. There is a technical level at 2750 where we could see a little bit of a pullback in silver. But now you're starting to see some of those other metals, platinum, palladium, starting to catch a bid. And I did send you a DM on a picture. I'm not sure if we're able to pull it up or not.
I did get it. Yeah.
Cool. Yeah. I don't know if it's going to work, but basically it's the Commitment of Traders report. It's over the last 20 years when you're talking about palladium. And full disclosure, guys, this is a thin market. Maybe 900, maybe 1,000 contracts trade on a day. It's very expensive to trade palladium, wide spreads, very volatile moves to the upside or downside. What has happened is that managed money literally over the last, let's say, 10 years continues to short it. Yep, there we go. So we're looking at that blue line that went from the top and went all the way to the bottom here. So managed money has went from long to them basically being short. And I think they've been short for a considerable amount of time. I can't really see that chart right now. Let me pull it up. Since basically 2017, you kind of see this move to the downside. Now, what also happened then? That EV trade started getting a lot of attention, and electric vehicles actually don't require catalytic converters, which is one of the main items that palladium is used for, along with a precious metal as well. But we saw this move to the downside. But now you kind of have a fundamental thesis that the hybrid trade might be the thing now that people are talking about. That doesn't mean that it has to sustain. You just need to have a spark to be able to spark the flame of a short covering rally. And we are seeing that right now in real time, where managed money, for the most part, it wasn't this week, but it was actually not last week, but the week before last, they were at the shortest levels that they have been. Now you have a situation where every speculator out there is trying to find a metals type of trade, catching a lot of that managed money flows that were shorting the product, getting offsides on that. And then any other ETFs that are out there, or managers that are out there that were under allocated to the natural resources trade that we've been talking about are now also trying to gain exposure. So we're seeing that pretty much in real time. Prices have not been able to sustain advances for palladium, full stop, right? But the covering of that trade right now seems like a trend that actually could probably last for the next week or so, until something dramatically changes.
No, I agree, and that kind of brings us into our next thing, is we could talk about precious metals. Just kind of seeing what's going on with the precious metals complex. What are you seeing in gold right now? Everybody's talking about gold. We were talking about palladium. Palladium, I think, is the most interesting one to me, as well as probably you, because that's a new one. And kind of like traders, I think, who are very good at trading usually are looking at what's new. Like, yeah, it's great. Gold and silver, we're in a great uptrend, but now what's next? And palladium looks like it's coming up next. So what are you seeing in gold? We had this rally, been a pretty wild rally already. Just not sure where we end up. A lot of people don't have any idea. For me, I'm a trend guy. Trend is obviously up. I'm obviously just going to be long, but you really know how to dissect the market in a way and kind of figure it out on a week-to-week basis. What should short-term traders be looking for right now?
Yeah. So for the gold trade, just some backstory here. So what happened with gold, let's say over the last 2 months, actually, it's not even the last 2 months, last 4 weeks, what occurred is it was a short covering rally that has now transformed into a risk on speculator bull market for now. Last 2 weeks, those price advances, that major move to the upside or that breakout was actually a result of short covering. I wrote about that. You can check it on my timeline, KG Bull and Bear. Now open interest is actually increasing, right? So speculators are getting in, they're getting into the contracts themselves directly, or they're using GLD. Now, GLD flows on a longer scale is still negative for the most part. But that doesn't really matter if you're talking about a week or 2 weeks, right? You just need that flows, that immediate flows. They're not going to be sticky flows when you're talking about speculators at all as well. So the price can continue to advance, right? You never go against the trend. But what I am seeing now is speculators are taking the reins right now. And Jason, once speculators get into it and start being the ones that actually command price action, that's where I call it late cycle. We kind of talk about these early cycles, late cycles for monetary policy. You have the same type of cycles when you have commodities. And that's the start of a late cycle for me. And that doesn't mean that it has to end over the next week or 2 weeks. It could continue to last. But when you're seeing these volatile intraday movements, and producers are pretty much fading those moves, right? They're fading the supply and advancing in prices, which they should. Producers want to lock in higher prices. They're hedging. We are seeing that right now. Last week was the first week of that action. Once again, you could have 2 more weeks, 3 more weeks of that action until we need to either have a renewed catalyst for the overall structure to continue to increase as far as its bullish nature, or we start seeing speculators fade once prices start to peak out. That's what I'm seeing right now for gold. For a price level, I really don't have one. I mean, can keep the even increments, 2,400, 2,500, 2,600, 2,700. Those are really even numbers. It sounds very simplistic, but commodity traders are very simplistic as well. So don't fade against it. That's just the levels that we're looking at right now when it comes to gold.
No, I like that. And yeah, I mean, we are seeing extreme shorts in commercial buying. We're almost there, to a new low. I think the thing that, to me, to really take into consideration here over everything else, and why I would still feel a little bit more, I'm comfortable bullish here. And the reason why I'm very comfortable bullish here, one, those spreads usually happen at the beginning of most of the moves in the precious metal market, because there's no mania like gold mania. Forget who said that. It might have been Richard Russell. But there is no mania like gold mania. Once people get into it, they get rolling. However, the reason why most of these other moves didn't really come to fruition is because silver was never catching up. Silver was never catching a bid. Gold miners looked like trash the whole time. So now we're finally seeing silver starting to catch a bid. It's had a nice breakout. We are long in all of our systems right now, short term, intermediate term, primary trend. So, silver hasn't done that in a long time. And so now we're seeing this silver have some outperformance. That's kind of getting me a little bit more bullish. But once again, it's important to understand these extremes here, because I also fully believe, because I also trade the COT reports as well, it's part of my system, is that once you get into those types of environments, you do run into situations that can kind of work against you. Short-term traders, like Kevin's looking for, I'd be looking for a pullback. Structurally, for an uptrend, for a long-term uptrend, I'd say, hey, this could continue a lot further. However, you always have to be open to the risk, and there are risks out there where positioning's starting to get a little bit offsides for sure. And I completely agree with Kevin on that one.
Yeah, for silver too, that was a different dynamic to start that bull run as well. That was actually long positioning from the start. It wasn't a short covering rally that turned into a bull market like gold. Silver, you saw that incremental increase in positioning, and then now you're seeing that spike. And so once again, when I kind of come back and say late cycle, it doesn't mean that both managed money and retail and speculators and even producers can't all work in tandem. Like, that's not what I'm saying. What I'm saying though is the producers are selling some pretty decent flow right now compared to what we saw last week. They're selling some pretty decent flow. There's a technical level at 2750 to 2850 that you can maybe see a technical pullback. Silver usually does not ignore good, very long-term support and resistance levels. And if it does, then yeah, party on. Maybe a little bit of a pullback. But with silver, you have that industrial metal standpoint as well as the inflation narrative. So I think for gold, that double down of that continued run to the upside, it could be tomorrow if we have a very hot print for CPI. I think there's already a position that's been made right now in light of that, when you're looking at the yield moves and the dollar strength and things of that nature. But there might still be a little bit of juice there if we see maybe 0.5% month over month for headline CPI. Yeah, you can probably make a case for that. But once again, let's say if that does not happen, silver still has the industrial properties for it, but you have to brace for some vol. And that's all I'm kind of saying. You maybe brace for some vol. A pullback would not be outside of the ordinary. And I'm just trying to highlight that, Jason, because for you, you're probably like, yeah, man, I get it, right? But for those that don't trade it, I think it's very important for them to say, look at the chart, look at a 1-year daily chart, and look at all those technical pennant formations, good support structures, resistance levels where it's faded, continues to regroup, consolidation levels. All of the meat and potatoes of technical analysis is literally wrapped up in silver. So you have to be mindful of that, regardless of what the primary trend is, which is a bull market for silver. You have to be mindful that it does respect it. And so if there's algorithms out there that are basically back tested on price action, they're going to then trigger at those price action levels, regardless of what flows are doing. You're going to get resistance there. It doesn't mean the whole market's got to tank. It's just going to be harder to break through. And that's kind of what I'm highlighting there.
No, for sure. It's it's not what I'm saying. It's not a debate. I'm not debating exactly.
Oh yeah, no. I'm saying for others.
But I'm saying also it's I completely agree with that sentiment. Also, the fact that we have people watching here, and everybody doesn't trade like you, and everybody doesn't trade like me. So the more we're able to cover, like, hey, like here's an area where I would be cautious. Here's an area where I'd be more bullish. That's also important, because I think in general, the thing that really hurts a lot of traders is the fact that they don't really think about it like that. Like it's simple things like, I have my buddy Brian, and he's really great trader, known the guy for years, and he does very simplistic stuff like, hey, here's a great resistance zone. I'm bullish here, I'm bearish here, like just very simple, but however it works. And really, like, you can do that across all time frames. If you're using an hourly chart, if you're using a daily chart, if you're using a weekly chart. So however you look at it, it's incredibly important. For me, I'm really looking at, especially for me, I'm at my long-term time frame, I'm taking smaller positions than most people would take. I'm able to handle the volatility better than most people can. And because I'm diversified a little bit more than most people also can be. But looking at, silver here, just the basic chart of it. If we're just looking at this kind of pennant pattern, now granted, my lines are a little bit messed up because I use line charts usually, but I just put the candles on. I know a lot of people like candles. But looking at just this breakout zone, here, if we're looking at this breakout zone, basically able to sustain above it, I'm very bullish above that zone, even though, yeah, I do agree with Kevin. It's getting a little bit of mania very quickly, and you can see pullbacks. You can see a pullback right back to that green zone and getting support. As long as we hold that level, I would continue to be bullish on this area, while also understanding that precious metals are incredibly, for lack of a better word, finicky. Um, they basically go in crazy phases at all times. They go up, they go down, they go sideways. They look like they're going to break out, then they don't. There's very specific. It's kind of the thing Gold Bugs and I kind of get into arguments about, which is there's very specific conditions that gold and silver likes. Something like technology can go up in like 3 different environments. It can go up in growth slowing with inflation rising. It can go up with in the reflationary environment. It's not the best place to be, but it can still go up in that environment. It can go up in a Goldilocks environment. Obviously, it's its favorite environment. Some of it can even go up in a more defensive environment, especially nowadays that these companies are blue chip companies. They're huge blue chip companies. So technology does good in a lot of different environments. Gold, silver, gold really likes growth slowing over everything else. That's what I found in my back test. Yes, it does like inflation, but it has to be the right type of inflation. If yields are just raging and oil is just raging and everything's raging, gold usually is pretty flat around them, which is also good. Like if you're a long-term investor in gold, fine. I'll take something that just is flat any day. However, it's not the environment it likes. So as a trader, we have to understand that that's not an environment it likes. This environment we're in today, coming out of a Goldilocks environment, going into more of a reflationary style environment. This is an environment that it likes, as long as growth doesn't start just taking off here, which it looks okay. Honestly, it could. And I think the big way to kind of understand where we're going to be at is oil and gold raging together is a very rare thing. It's a rare occurrence. Yep. It does happen. It happened in the 70s. It's happened a few times in the last 20 years, but now we're kind of getting to the point where we're like, okay, this isn't the perfect environment for gold if we continue to see oil just rallying. If oil starts hitting 100 and so on, that's also a bad sign. And I also want to talk to you about one thing too. You mentioned unstable prices. I think that's really interesting because we can kind of talk about shipping companies. Shipping companies are the most unstable. Their underlying being shipping rates is the most unstable thing in the market, which is why we see those companies have a lot of trouble, which is why we see so many crazy high dividends from these companies at times and so on to keep investors aboard. What are you thinking about, that shipping trade? People haven't been talking about it much now. It's not the hot topic right now. However, we still are in a situation, and some of the stocks are actually still continuing to do well, that they could go up even more. Do you think that has any effect on oil, any effect on those individual companies, or anything you're seeing in that area?
Yeah, so it definitely has an impact on oil. So the rerouting of ships has caused for ships to utilize more fuel, right? And so that's going to have an impact on fuel oil and things of that nature. So yeah, there has been a little bit of a draw there. The thing that, so the shipping trade, when you had the geopolitical issues like we saw, they definitely saw a bid, wrote about that one too. The problem that I'm going to have with those right now is that the cost, their insurance cost, I think, has exceeded a lot of people's expectations as far as how much they had to really pay up. Now, they've been able to pass some of that over to the consumer, but it hasn't been as great as maybe people have thought. So there was a thought process out there that we would see margins expand. Yes, they're going to have insurance costs, but they're going to be able to, if their insurance cost goes up by 20%, 30%, 40%, they would increase margins, or they would increase cost by 80%, pad that stat a little bit more. I don't think that has been the case. And it seems like a lot of these companies are going to be, for the most part, for the next year or so, avoiding the Red Sea at pretty much all costs. And so that's going to have an upfront impact when it comes to their bottom line, to say the least, because the readjustment when it comes to labor, their labor costs also went up dramatically, war risk premiums and things of that nature. So can you see maybe tailwinds for shippers? Maybe. Let me say this. Say it like this. From a fundamental standpoint, profitability standpoint, it's going to be very tough. The geopolitical standpoint, though, we can see another bid into shippers for a trade. But if you're waiting and going to hold shippers for eight months and think that the fundamental landscape of that trade is going to pan out, basically their multiples are going to match the price action, I don't think that might be the case. I think it's a nice little, hey, we might see an escalation or expansion in certain areas of the region, or Russia's getting involved, and that's where we start getting, that's where you get, that's where you could probably get the trade. But I feel like it's going to be very difficult for them to sustain profitability until they figure out the insurance side of their business. And that's a very concentrated market too, right? Like that's not something there's not hundreds of insurance companies for shippers. There's only like maybe 3 main ones, and they're all pretty much in London. And you have to go by their laws as well.
And I keep bringing that up because it's something that keeps getting brought up to me, and people want to just buy them. And like, I think of shipping like someone telling me, hey, I want to do a 10-year investment in oil. Once again, maybe it could pan out, but what type of volatility can you handle? Like, what are you trading it in? Futures? Yeah. Are you gonna, it just doesn't make much sense to me, because the shipping stocks, while they're very interesting and like could be fun for a trade, they're not really a long-term investment vehicle. And so that question continues to come up again and again. And I'm just like, it's a fun trade. Yes, absolutely. You can use it for a trading vehicle, but it's just like another commodity where you have crazy volatility. You got to get going, Kevin?
Yeah, I do. I'll just add on to that. Sometimes the stocks investment is not the right one. And so, I mean, if you're waiting for an event to happen, you can look at buying longer dated call options and then selling shorter dated premiums against it until you start to get the hint that something's on its way. And then that's where you would take that shorter dated option off and then try to get that run or that increase in IV. So there's sometimes where you're right. I mean, sometimes you're looking at a shipping company and you're like, this is dead money. And then the majority of them are. There's a couple of decent ones, but the majority of them are dead. They're dead weight unless they get acquired, or they're dead weight. And people don't understand, in the shipping industry too, there's a huge influx of new ships that are going to hit the market pretty much in like 2027 and 2028. So they already have an oversupply of ships. This situation actually helped them out because now they can utilize more of their fleet in a more efficient manner. But once we see that influx hitting the market in about 3 years, the rate of shipping and the amount of goods being shipped does not match the exponential growth that they're going to have in shipping supply or capacity that they're going to see in another couple of years, which is why they're kind of a little bit concerned, right? But the near-term trade, the near-term pop type of trade, I think is a decent one. And you can look at, once again, looking at 6-month options and selling calls against it to lower your premium against it.
No, I like that. Perfect, Kevin. Well, thank you so much for coming on, man.
For sure, man.
We'll talk soon, I'm sure. And, maybe we could hop on and do another 30 minutes this week if you get some time, and we both can figure it out.
Holla at me. Yep, for sure. Right. You have a good one.
Good seeing you, Kevin.
See you.